Let's kind of shift a little bit more to this the stock market right now in the United States, because I'd like to get your insights. I mean, we've seen a tremendous amount of loss under Donald Trump. I think I saw a graph of confidence in the economy. This is amongst polls from the American citizens. Confidence in Donald Trump leading the future of the economy. Confidence in the American economy. I've talked to a lot of people in many different industries. Almost no companies giving guidance. No one really knows, what's going to happen. How are you looking as far as like U.S. equities are concerned right now and the future of the U.S. stock market? How are you looking at that from your investment angle?
Look, my starting point is that obviously it's a super important question, but my starting point is that from 22 to 25 or late 24, the US stock market added 20 trillion in market cap. You went from a $40 trillion total market cap to 60. And it wasn't because there were a bunch of IPOs and new companies listing and all these things. It was literally every marginal dollar in the world went into a handful of stocks. And it was a handful of stocks. So as you look at the Russell 2000, it went nowhere. You look at the small cap, the mid caps, that went nowhere. It was literally, sort of 15 US stocks. We called, I know people talk about the Max 7, but it wasn't just the Max 7. It was really the Nifty 15. Now, to put things in context, the total market cap of Europe is about 7 trillion. The total market cap of Japan is about 6 trillion. So in the past 2 years or 2.5 years, the US added more than Japan and Europe put together in terms of market cap. And a lot of that excitement was, it corresponded to a few things. Part of it was the US, unlike the rest of the world, was going through massive fiscal stimulus, and I would say pro-cyclical fiscal stimulus. You had essentially in 2022, you had a situation where the US was running, nominal GDP growth of 5-6%, unemployment was 4%. And Biden came out and said, we're going to do another $1.5 trillion of stimulus. So you had extra fiscal stimulus, number one. And number two, you had all the excitement around AI, right? There was all of a sudden this belief that AI was a golden goose. It was going to generate excess cash flows. And that only a handful of US companies were really involved in that space. Because to be involved in that space, you needed to be able to spend $50-100 billion a quarter in capex, and there were only so many people who could do that. And this is what, of course, these two things have now disappeared. The fiscal stimulus under Trump is gone. We've moved from fiscal stimulus to DOGE and trying to control the excess government spending, number one. And number two, the idea that AI was going to be this golden goose has been shot in the head. That idea, as when DeepSeek came out and said, you know what, we built this with a piece of strings and a piece of bubble gum, and it's as good as anybody else. And it essentially highlighted that the hundreds of billions of dollars that have been spent in AI capex were a write-off. And so I think that was an important shift for the markets. More importantly, in terms of AI, it signaled we're now in a world in which China is also an AI player. Now, one of the things I've learned out of my 30 years in Asia is that when China enters a room, profits walk out. It's like the last thing you want to do in life is compete with the Chinese. Like if you find yourself competing with the Chinese, your career has taken a really wrong turn. And you need to reevaluate. And that's essentially where US tech is today. And so we now have this paradigm shift where the two things that push the market from 40 trillion to 60 trillion are now gone. And instead, where you're seeing the fiscal stimulus is no longer in the US, it's now in Europe and it's China. And so the marginal dollar is no longer going to go to the US, it's going to go to Europe, it's going to go to China. And I think that's already happening. So unless you get a new super exciting thing in the US, like something that promises to build more capital spending, something that promises to build more productivity, something like the shale revolution and from 2005 to 2012, or something like the launch of the smartphone, which created a whole new ecosystem and get everybody fired up. Unless you get something like this, it's like, okay, the age of US exceptionalism just died with DeepSeek. DeepSeek essentially put a stake through the heart. So you went from 40 to 60 on the belief that the US could do things that nobody else could, and now you're going to have to walk it back. And by the way, if you go back to 2000, I think it's 2014, so 10 years ago, the market cap of the US was 20 trillion. So you've gone from 20 to 40 to 60, and over this decade, have you had massive productivity gains in the US? You had huge productivity gains in energy. And the smartphone ecosystem was very exciting. These were the two pillars on which this boom was built. Where do you go from here? You need a new exciting things. If you don't have that, then for the marginal dollar to keep flowing in the US, you either need China to implode or you need Europe to implode. Unfortunately, I think right now both places are going in the other way. Europe is, doing fiscal stimulus, bank loans are accelerating, they're humming along on the back of cheaper energy costs. China is also doing okay on the back of cheaper energy costs. The government is doing more fiscal stimulus. While there were fears that the trade war would mean an implosion in the Chinese economy, I think we're quickly realizing that actually the weaker link on the trade war may well be the US.